All right, hopefully everybody can take their seats and get comfortable. We're going to get started since we have lots of founders to hear from today. So very excited to be here. My name is Sarah Garces Roselli. I am the co-founder of RevTech Labs and RevTech Labs Foundation. So just a couple reminders for today. Hopefully everybody has joined the pre-app on the App Store, and that will give you the opportunity to comment and get information about the founders, connect with them, and all that fun stuff. It's pretty self-explanatory, so hopefully everybody's already downloaded that. And if you have not, there are QR codes here to allow you to do so. All right. So I want to talk a little bit about RevTech Labs Foundation. We're based in Charlotte, North Carolina, an accelerator for Fintech and insurtech companies. We currently have 162 alumni companies, 10 of which are here today. I think 9 or 10. And we are super excited that we have some great statistics around survival rate. Our founders have an 84% survival rate after 2 years. And we are very proud of the fact that our portfolio companies, over 53%, are female or founders of color. So really trying to disrupt the diversity gap amongst founders. We run a VC firm as well called RevTech Labs Capital, and have 2 cohorts a year. So we are actually recruiting now for class 21. This is class 20 that is here today. And we are joined by several other folks in the room that are going to tell you about their accelerator programs as well. But before that, I want to invite you all to join us. There are cards on your chair for our Fintech and InsurTech Generations Conference, which will be taking place on June 12th and 13th. It is a thought leadership conference that is in its 10th year. So we are having our 10th anniversary this year. Very excited about that. It's going to be at the DuBois Center, which is part of the University of North Carolina at Charlotte. And we have lots of awards to nominate folks for, so please, grab the QR code, nominate folks that you think are interesting in the ecosystem, and come and join us so you can see our founders, meet other thought leaders in fintech and insurtech down in Charlotte in June. All right, so please join me, CAFE, to tell us about you.
Thanks so much. My name is Kristen Castell, the Managing Director at CAFE, and today we really see the power of community and partnership. So I want to thank RevTech Labs and everyone else here for that opportunity. And many of us in this room, have the privilege of financial education, access to resources, and financial security for ourselves and our families. And also, many of us in this room have had personal experiences or with their community or their family where they didn't feel confident about achieving their goals in life, and they don't have financial security or access. And so at CAFE, we believe that access to innovative new fintech technologies and access can really provide and advance financial health and well-being, really for all of us. And it's not just helping lives, but it also is good for business. So with CAFE, our mission is to advance financial wellness for LMI and also underserved populations through fintech innovation and partnerships. And we are creating a community of financial institutions, investors, and entrepreneurs to do this in this mission. How do we transform finance to be more inclusive? And so I'd love to speak to anyone that wants to get involved as a strategic partner, wants to meet our extraordinary companies, or also just wants to learn more. So Kristen Castell will be here after, and we have the QR code here, and I'm excited to present 5 out of 6 companies in our first FinTech Accelerator program today here. So there are the logos. All right, thank you.
Thank you. Wayne, you're up next.
Thanks. Hey, good morning, good afternoon. Just traditionally, one thing I always like to do when I come to these events is recognize the courage of the founders. I'd like you all just to give them a big round of applause for what they're doing and trying to change the world, right? Good deal. My name's Wayne Miller. I'm the Senior Vice President of Innovation at the ICBA, the Independent Community Bankers of America. And for those of you who know me, I also wear a second hat as a general partner in Bank Tech Ventures, so those are 2 commercials. We started this program about 6 years ago, and it has evolved dramatically, and our emphasis has been on finding bank-ready technologies for community banks. My bankers are about 4,700 in terms of who we represent. And if you have an interest in investing in and or serving community banks, let me know. That's what I'm here to do and to create those channels. We've been known for a very successful accelerator for many years. We have two great companies here today, Gopal from Conductive and Devin from Micron Notes. Happy to present them to you guys today. But we're no longer really defined as an organization by simply our accelerators. So we now do 2 a year. The cohorts are 6. We're just closing on the second one for this year. And then towards the fall, we'll also be doing some other things as it relates to really building out innovation programming, things that we call Fintech Connect, our solutions forums, which we'll do in the fall, which will focus on very specific topics, bringing 5 or 6 companies in, working closely with our community banks. One of the great benefits of this program is that the folks who were in it and talked to Gopal and to Devon had a chance to really be intimate in the right way, of course, for about 30 minutes each with about 150 bankers over the course of the 10 weeks of the program. And it's not a sales environment, but it's a highly collaborative environment that we've worked hard to protect to really help the bankers and the fintechs really accelerate their solution and get to market. We tend to focus a little bit past seed, so pre-A to A is kind of our sweet spot. But one of my promises to my bankers is that what they will see in the program is something that they can put to work tomorrow. So really happy to be here. Thanks to Dan and the team. This is great. It's my first time after being in this position for about 7 years, being in New York for FinTech Week. Jonathan crushed it yesterday. It's been great. Thank you all very much. I'm here later, and let me know how I can help.
Thank you so much, Wayne. Jemima?
Love being on the wrong side of the room. Hi, everyone. I'm Jemima Oreva-Ogane. I'm a director within the Inclusive Ventures Lab at Morgan Stanley. So what we are is a 5-month accelerator. We've been at this since 2016. We have a portfolio of over 90 companies, and we focus on tech and tech-enabled businesses. Our sweet spot is firstly, honestly, that we are very founder-friendly. We really are just here to champion our founders, 2 of which are in the room. I see Dennis from Zeru over there. Notice Ninja is also going to be presenting shortly. And if you're interested in figuring out how you can get some companies into this lab, please feel free to come find me. Our focus is on tech and tech-enabled businesses, and we focus on just being able to take founders from being a founder to really being a CEO and learning how to run a company. Thank you.
Thank you so much. All right. I believe we are almost there. Nope. Richard, sorry.
Thank you. I am. I also, thankfully you're on this side, so I guess it is the right side. Hi, everyone. I'm Dr. Richard Manasi, Accelerator Managing Director at the Tampa Bay Wave. Great to see you all today. I'm also a Techstars entrepreneur in residence, a couple of times founder, and an angel investor and LP in about half a dozen funds, 2 of which are actually located here in New York City. I'm also a previous fintech founder. In fact, my last company did dynamic budgeting for large healthcare systems and hospitals. Not rocket science, of course, when it comes to finance, but in healthcare, unfortunately, it is rocket science. That company, I partnered with McKinsey. I'm ex-McKinsey too. Had a great run there. But I'm very, very excited to be here today to support not just our founders that are here in the room, but also all the founders here pitching today. Quick thank you to RevTech Labs, Ashley, Casey, Dan, Sarah, and the entire team for your time and effort in putting this together, as well as the sponsors, partner organizations, founders both presenting today and in attendance. All of you here today supporting these great startups and programming, and the great city of New York for a fantastic FinTech Week. Certainly without your care and support, there's no way that these founders are going to be able to maximize their opportunities. 1 + 1 always equals 3 when it comes to a great community. Tampa Bay Wave is a zero equity, zero cost accelerator program based in Tampa, Florida. We run specialized accelerators, FinTech being one of them, through our 90-day programs. And we do have a focus on not just US companies or Tampa or Florida companies, but really across the entire world. We're a nonprofit backed by the state and federal government, as well as corporations like JP Morgan Chase, Bank of America, Raymond James, Ernst & Young, Encore Bank and Smiley Technologies, DTCC, and more. We specialize in really helping our founders move and move quickly with our partners and our region. So we like to think of ourselves as fuel for your rocket ships. We do have a FinTech program that's kicking off in the fall. Applications will be opening in short order. So if you actually look on the screen, that QR code will take you to our FinTech program landing page. You'll see some very fun, familiar faces. Wayne being on our advisory council from ICBA, and then Dan as well with RevTech Labs. We really are looking for great founders solving real problems. And as I am the last speaker, I think before we kick things off, good luck to all the founders today. Thanks again, RevTech Labs, for putting this together. Very excited to be here. And thank you to all of you here in New York for hosting me and the other travelers in for a fantastic FinTech week.
Awesome. Thank you so much. All right. Well, let's give all these founders who are all nervous a very warm welcome and give them a big round of applause before they start. And we have one rule at RevTech Labs. Every founder gets clapped at the end of their pitch. So please do not forget to give them a personal hurrah. Okay. So without further ado, we are going to start with the pitch companies. First up is Acceleron Bank.
Hello, my name is Damon Magnuski. I'm the founder of Acceleron Bank. First off, I'd like to thank RevTech Ventures for having me today and Rise. It's good to be back here. So it turns out, in a really weird twist of fate, banks and credit unions still have problems processing domestic and international wires. Now, when we first went on this quest, we were really surprised to find out how easy and lucrative these transactions can be, but other people are making all the money. So as we grew and we built a big moat, it's now our time to shine. And today we're processing foreign exchange and US dollar international wires on behalf of 200 financial institutions here in the United States. And we're integrated into 1,000 more. If we close 200 of those, we'll be at the $200 million run rate. So we're pretty excited for that. But wait, there's more. There's thousands of international banks that need our services as well. And they often pay their correspondents $150,000 a year just to have an account. So as global payments become instant payments, our combination of patents, integrations, and scalable architecture will make sure that we're a player in the $4 trillion a day payments industry. Thanks so much.
All right, one quick thing before we get AlgoPair up on stage. The event code for the app is 3642. 3642. You did not have that. Okay. Go ahead, you're up. AlgoPair.
Good afternoon, everybody. Oh, that's loud. I'm the co-founder and CEO of AlgoPair. We are a AI-powered embedded investing app. We work with also community banks and credit unions. The reason I started this company was because once I was living out my car in college. I needed to find a way to build wealth, so I turned to the stock market. After turning to the stock market, I struggled for about a year. It took me about a year to figure out how to break in the market and how to actually build my own wealth. So with that being said, I went to go work for TD Ameritrade to learn more about this technology, to learn more about trading algorithms. And this is where I learned that this has already been a thing since the 70s. But what I didn't understand is why isn't this available to the everyday person to truly build wealth? And I'm not talking about the 401k that gives you 6 to 8% a year. I'm talking about 20% returns a year. So I learned that 95% of retail investors actually blow up their accounts within 1 year. They don't make it. So we built this product to where it can embed in the community banks and credit unions because we serve the same members, the everyday person that struggles to build wealth. And doing this, we've been able to get our first big enterprise client. We did $3 million last year. That's allowed us to scale and learn more about the industry. And we already have $6 million in revenue this year for the community banks we're working with. With that being said, our market is extremely large, $45 billion. But when you look at the community banks and credit unions, we're looking at $7 billion that's untapped. They need their investment arm. They're not usually budgeting for that. So AlgoPair comes into play to help them service their members, build up their AUM, and keep their retention so that retail investors don't have to go to a Robinhood or Webull and leave their platform. They can have the same services, but even better, right with AlgoPair in every community bank in the world. We are looking for investors who truly believe in democratizing wealth. We understand the regulatory roadmap. We know exactly who we're going after. It's right there. We have these partnerships lined up. So we're looking for investors who truly believe in that to help us raise our Series A and find our lead investor. We already have $4 million committed. And so we're happy to talk to those who are looking for a wealth tech solution to change the world. Thank you.
So if you are standing up and you want to sit down, there's a lot of seats up here in the front. All right, you are next. Next up is Beta Financial Services.
Good afternoon, everybody. My name is Siki Ballard. I'm the CEO and founder of Beta Financial Services. I'm thankful to be here today to discuss how we're revolutionizing small business lending. Beta has developed cloud-based loan underwriting system that streamlines the small business lending process from start to finish. Our products empower banks to manage and evaluate small business loans completely online, extending their market penetration and profitability. Traditional banks tethered to extensive branch networks and outdated technologies struggle to profitably underwrite small loans. This is a problem that disproportionately impacts women and minority-owned businesses. Did you know that all things being equal, meaning same income statement, balance sheet, cash flow, women and minority-owned businesses are 3 times more likely to be rejected for a small business loan? And for the fortunate few who receive it, they will pay, on average, 1.8 percentage points more in interest. The system is clearly broken. Today, most small business lending still relies on phone calls and in-branch visits to assess credit risk. Lacking technology to effectively manage loans online, banks are missing critical, valuable data sources that will enable them to more accurately assess credit risk and price their loans. Beta's products address these challenges. Beta Flow automates loan application intake via API, reducing decisioning time and increasing the scale without the need to grow branches simultaneously. Beta Score provides a comprehensive credit risk assessment score for small businesses. Think FICO, but for small businesses. And finally, 360 Views provides an AI-powered snapshot of the financial health of a business, similar to a personal credit report. This enables small business owners to take actionable steps to improve their bankability and lendability. Our customers are banks and credit unions. They collectively spent $18 billion on front-end banking software, half of which was dedicated to lending. We anticipate that this will grow 7 to 8% per annum. Our vision is that Beta Score becomes the indispensable factor in small business lending. No bank will make a loan without Beta Score. No small business will accept terms for a loan without Beta Score verification. Toward this end, we have LOIs from some pretty significant players in the industry. One top 10 SBA lender will leverage Beta Flow and Beta Score for their commercial lending. We are in advanced discussions with a major credit card issuer to use Beta Score to expand their market. Today, we are raising $5 million, and we are searching for a co-lead investor. If you're interested in driving equity and lending and powering American economic dynamism, talk to me after.
All right, next up is Capita.
Good afternoon, everyone. My name is Ben Su. I'm from Canada. I'm a Canadian founder. This is going to be a pitch not just for the investors in attendance, but also a pitch to my fellow founders. So I know you're practicing for your pitch, but I would like to have your attention. Yeah, so this is my story. I was a venture capital and startup lawyer. I've sat on both founder side as well as the VC side, deploying capital into founders. And what I saw was the process of closing a round involves endless of email back and forth. It involves like DocuSign, DocSend, and sending out wire instructions. I know you're nodding your head right there, Asel. Yeah, and also the biggest frustration founders have is that, I got a verbal yes from an investor, but how do I cross that valley of death and get money landing in my account? So I built a technology from my experience working as a lawyer. I was actually put on the contract automation team at the firm I was working at. So it's essentially a platform that allows you to launch your round, and we synthesize all the legal for you, all the terms for your round and the compliance. And that deal page gets converted into a Calendly-like link. So we save you the endless of back and forth of emailing. Just hit your investor with that link and close cash. So that QR code right there is actually a mock-up QR code to our seed round. Sorry, we already closed our round in under 6 weeks using our own tech. So I'm looking at y'all, like y'all should use my slides to close your round too. Yeah, we were backed by Drive Capital. We're backed by Hyperplane VCs, and right now we're only active in Canada. The reason why I'm in here is because I want to meet with all the founders, the founder community hub organizers. I know there's a few here today, as well as the VCs, so that I would love to get your insights and advice on how I could expand here in the U.S. So if you scan a code, you'll get to see the details of my round, and then you'll also get to email my co-founders and I. So that's my company, Capita.
Thank you, Ben. All right, next up is Keys.
Hey everyone, thank you so much for having me. 2 Canadians back to back is always interesting. I'm Terry, I'm the co-founder and CEO of Keys, and what we do is we give renters the flexibility to move when they need to without fees. Through a new product we call Lease Flexibility Coverage. Last month, we launched in Seattle to fantastic results across 187 renters, giving them access to life-changing flexibility they didn't have access to before, and we're continuously enrolling 9,600 more that we've already signed as part of LOIs throughout the course of this year. But back to the original question, why even bother solving this problem? It's because life happens, and people need to break their leases for perfectly understandable reasons, but when they do, they can go through a lot of costs, anywhere from 3 times rent all the way above 9 times rent just to leave your lease early. And this really costs renters in terms of financial distress, but also in terms of potential future credit issues down the line. Simultaneously, with property management companies, it also costs them. They have to go out there and they have to go collect on these fees, which notoriously do not have a very high collections rate. Simultaneously, they have to go and release their vacated units or else risk dealing with months and months and months of vacancy costs. Our solution to this problem, which costs consumers and businesses a combined $40 billion every single year in the US, is a new embedded insurance product we call Lease Flexibility Coverage. Landlords enroll their properties, tenants ultimately pay for and opt into this type of coverage. By opting in, they have the flexibility to move when they need to, for any reason, at any time, without any additional fees, just by making a claim through our online software and doing a quick online checkout process. Saves them a ton of money and saves them a ton of hassle. Simultaneously, on the property management side, it saves them on time, it reduces their vacancy losses, it reduces the amount of delinquency that they experience, and it gives them a new revenue channel to work on. Like I said before, we're already live in over 187 rentals with over a 20% adoption rate on renewal, and we're expanding out to 9,600 more by the end of this year. Our long-term goal is to be in 43,000 rentals by the end of 2025, and to have this as a standard across the country for rentals within the next 5 to 10 years. I'd love to have you all as part of this journey. We're currently raising the back half of our seed round, and if you're interested, have questions, or want to know exactly why we're tackling this really, really niche problem, please chat with me afterwards. Again, I'm Terry. I'm the co-founder and CEO of Keys, and thank you so much for the opportunity.
Thank you, Terry. All right, next up is Conductive.
Nice. I'm Gopal. I'm the CEO of Conductive. Nice to see everybody. Great fintechs are here today. I want to talk to you about a big problem that community banks and credit unions have. They make us largely go physically to the branch when we ask for a loan because we have to give them paper, driver's licenses, tax returns, things like that. Or they make us upload PDFs. And these days, no one's going to do that. Not when I can go to a fintech and use Plaid or some other technology and give the same documents in like a minute. So billions of dollars is lost in loans. And what are they going to do about it? They know they want to do something, but they don't have the people or the technology to make a change. So Conductive was purpose-built to solve exactly this problem. We are a way to white label access to all kinds of permission data sources, so open banking data, alternative data, and we're a layer of intelligence that sits on top of that data to help the smaller lenders make sense of it and lend better. We're helping 15 lenders today increase their loan approval rates by up to 47%. And they really like us and tell us, look, Conductive helps us do less work and make more loans. So how does Conductive work? Well, we've integrated with the legacy software systems and SMS and email that banks and credit unions use. So we can put a pop-up in the middle of the lending process at exactly the right time to gather this data. Then we give the data to the lender and they use it to make more loans. So what makes us different? Well, we have some really great go-to-market partners that give us C-suite access to thousands of community banks and credit unions. And we also have technology partners which let us integrate in 4 hours. We're growing really, really fast. We should be profitable later this year. And we're raising about $500K to prepare for some aggressive growth. So again, I'm Gopal. I'm the CEO of Conductive. We are white label access to data sources like Plaid and many others for open banking for the folks who are smaller and can't quite do it on their own. And we're also an AI layer that sits on top of it to help them make sense of the data and lend better. Thanks so much.
Thank you so much. All right, next up is ForwardLane.
Hi, everyone. My name is Nathan Stevenson. I'm the CEO and founder of ForwardLane. Imagine you're a financial advisor. Melrose is her name. She spends a lot of time every single day trying to make critical decisions for her clients. But finding that data and getting those insights is time-consuming and costly. In fact, it takes her about 50 to 80% of her day just gathering and analyzing that data. Guess what? Melrose is not alone. In fact, 60% of insights projects fail, and it takes almost 7 months to get insights from data into production. So I'm a former hedge fund quant from hedge fund CQS. I spent my entire career synthesizing large amounts of data into insights to make important trading decisions. We built an insight engine called ForwardLane. It takes structured and unstructured data, combines it together across the organization, and fires these signals across the data. So it's the same process as automating that analysis process that Melrose would be doing herself. It delivers those insights into her workflow inside of CRM, and now with a generative AI interface, you can ask questions of those insights and that data. Today, it's used in production by companies like Invesco, Principal Financial Group, and other large financial institutions. I raised about $10 million in capital to date, and we are growing really fast. It's a huge market at this intersection of taking data and creating the insights out of the data. In fact, it's the future of how we work with AI. So I'm interested in, we're raising a $10 million Series A round of funding, and please come and speak to me about that. We'd love to find new partners. Thanks.
My mic works? Yes.
Next up is Micron Notes.
All right. Hi, everyone. I'm Devin Kincaid. I'm the founder and CEO of Micron Notes. I'd like to ask you to imagine a company that is expert in machine learning and marketing automation for community banks and credit unions, of which there are about 9,000 in the United States. This company has served 100 banks and credit unions ranging from 300 million to 20 billion in size over the last 5 years, having all of the security infrastructure, integrations, compliance expertise, and distribution partnerships needed to survive and thrive in the banking technology space. An interesting company, but maybe not the next unicorn. Now imagine that same company suddenly starts processing all 230 million consumer credit records in the United States on a weekly basis. This little machine learning marketing automation company suddenly realizes that it now knows where every single dollar of mispriced debt is in the United States. Let's imagine that little company develops a product that with a few keystrokes automatically determines the operating footprint of each of 9,000 community financial institutions, finds every dollar of mispriced debt held by qualified borrowers that drive by one of the bank's branches on the way to the grocery store. The tech stack then automatically creates all of the compliance approved collateral and delivers a completely personalized firm offer of credit to each and every one of those consumers. It's kind of like Credit Karma for community banks and credit unions. The company tests the new product in the fourth quarter of 2023, and the results are so good, generating net negative customer acquisition costs, that it books $500,000 in contracts in the same quarter in which it released the product. In the next quarter, it increases its ARR by 50%. Where the company once generated a few $1,000s per bank per month in fees, now it generates tens of thousands of dollars per bank per month. It's like automating new customer acquisition for community banks and credit unions. No one else can do this, and we're just getting warmed up. That little company is Micronotes.ai, an Experian Ventures portfolio company that now needs growth capital to hire salespeople to get out to the 9,000 banks and credit unions that need this solution to compete and to grow, and to help borrowers improve their financial lives by banking local. So go ahead and pre-invest in Micronotes and track me down and I'll show you a demo. It's amazing. Thanks.
Thank you so much. All right, next up will be Muse Tax.
Hi, everyone. My name is Colin Horsford, the co-founder and CEO of Muse. I'm here to talk about everyone's favorite topic, taxes. It is tax week, so quick question. How many people in here enjoy paying their taxes? One person in the back. How many people here enjoy overpaying their taxes? That's even more fun, huh? Well, unfortunately, over $600 billion was overpaid to the IRS last year, and that's their number. Mainly because a lot of people aren't realizing that they're overpaying their taxes and waiting for a tax refund to pay down debt or even to just put food on their table. And that's why my co-founder and I created Muse, which is a B2B API. And we also have an off-core platform that can allow people to do things like use AI to not only find financial insights when we analyze their data, but we actually work with two of the three largest payroll providers in the country to optimize payroll deductions so that people can actually get early access to their tax refund. And by virtue of doing that, they can do things like pay down debt, put food on the table, or invest it and save it in a high yield savings account. So what we're really looking for is to work with banks and also payroll providers so that we can boost people's paychecks. Our flagship product is that, and it's called Check Boost, where we go in, we optimize their payroll deductions, and we find opportunities for them to save money and also tell them where they need to put their money. Then we also have our another product called Compass, which is our predictive analytics engine. And what we do there is we can look at all the transactions from a small business or any type of transaction, be it your bank account, your payroll, your QuickBooks account, or even down to your investment account. And we can find opportunities for you to save. We can do intra-bank lead generation. So ultimately what we go in and do is we go in and find the products and we put those in front of the user so we can increase non-interest income for banks. Then with payroll providers, again, even recently the Wall Street Journal released an article saying a lot of people are actually waiting for the refunds to pay down debt. So that's why we go with the payroll providers, and we'll be soon an added benefit when you're going through open enrollment so that you can go in and actually optimize your paycheck, and then we can give you early access to your refunds. Another stat for you. over 78% of people in this country live paycheck to paycheck. So if you think of all of your friends, chances are one of them are. Now, that comes in all colors, shapes, and sizes. So what we're doing there is we're saying, okay, how about we optimize people's finances and then put the right products in front of them? So ultimately, if you have any connections with banks, we recently just raised a round from some great company. We went through Techstars, one of the top AI funds invested in us, also NYU, Lytical Ventures, and Everywhere VC. And we'd love to work with any fund, and also we'd love to work with specifically community banks, regional banks, and others, because a lot of their customers are sometimes not the main focus, because a lot of times they don't have disposable income, but they do. They're just waiting for it in April. And that's why we created Muse. Thank you so much.
Thank you, Colin. All right, next up is Nestor.
Hi, everyone. I'm Brendan Keneally. I'm the founder of Nestor. A few years ago, I was having dinner with one of my best friends, and he had just bought a house, and he was telling me about all the things going wrong with the house. The roof leaked and needed to be replaced. The hot water heater had a similar issue. And now, my background, actually, I started a couple schools, went to Harvard Business School, and then was most recently running a big high school. I had a lot of experience with facilities, maintenance, budgeting, and big construction projects. So I started asking him a lot of questions about what was going on. And what I learned is that a lot of the things that were going wrong were really just up on their useful life. They were wearing out. But he had no visibility into that, despite the fact that he had a great realtor, he had a home inspection, and he's generally a pretty smart guy. And so I started to ask why. What I learned, doing a little research, was that his experience was by no means the exception. The reality was that the number one regret of homeowners is the unexpected costs of repairs and maintenance. And so nerds and contractors got together and we started Nestor, because those unexpected costs don't have to be unexpected. The reality is that most of them are relatively predictable. So what Nestor does is, if you're going to buy a house, before you put in an offer on that house, we provide you with a very simple report that shows you a timeline over the next 15 years of when all the major systems will need to get replaced or upgraded. So roof, windows, HVAC, plumbing, electric, put it on a timeline, and then based on that, show you how much you need to save per month in addition to your mortgage in order to cover those costs. We give every house a Nestor score, which is kind of like a FICO score for your house, and do a few other things as well. Pretty quickly, we expanded to homeowners, because homeowners came to us and said, hey, I'm not using this to buy a house, I already own it, but I'd still love all that information. So now we do this for homeowners. We can go direct to consumer, but our two major channels that we're focused on right now are government, which is really using it for two ways. One is essentially as a consumer protection product for homeowners, and also to better understand the condition of their housing stock in their local communities. And then the other channel is financial institutions. We're using it in a couple of ways. The biggest is, this is a really great, highly interactive, value-added product for their existing customers. So they can provide Nestor to all of their existing customers who are homeowners or home buyers. They get their Nestor report, which lays out all of the major costs that are coming for their house. It's now a great opportunity for the bank to cross-sell on existing products that they have, so that they can help that customer finance some of those major costs that are coming. It also fits really nicely into financial wellness products that the bank might have, or initiatives that the bank might have. And so that's what we do. That's what Nestor's all about. We'd love to talk to you if you're a bank or financial institution, and we're going to be raising a seed round very soon. So excited to talk to any VCs in the room. Thank you.
Thank you so much. Okay, up next is Notice Ninja.
Have you ever had an arrest warrant issued for your CEO? This is a dirty little secret, but it's happening all the time. My name's Amanda Reinecke, and I'm the CEO and co-founder of Notice Ninja. We are a digital notice compliance platform that's innovating how companies are managing and resolving tax and compliance notices from government agencies. And we're doing this in over 120 countries with the use of AI, machine learning, and our proprietary OCR scan-to-capture technology. Think Salesforce for tax and compliance professionals. The problem is there's an ever-increasing number of paper notices that are being sent to companies from state and regulatory agencies. In the US, we have 10,000 jurisdictions and over 89,000 agencies that are sending notices. And the IRS alone is sending out over 500,000 paper notices every single day. And this is costing companies billions of dollars in penalties, fines, and accruing interest. And arrest warrants are being issued for CEOs. Notice Ninja brings order to the chaos of these notices. We do this with our OCR scan-to-capture technology, where we enrich data and generate a best practice workflow that's dynamic and intuitive. We auto-distribute the tasks, and then we follow the life cycle of the notice resolution, giving never-before-seen analytics and reporting. Our biggest competitors are Excel spreadsheets and inefficient manual processes. We have product market fit with over 50 clients and growing. We're in the enterprise governance, risk, and compliance space that has an estimated TAM of $134.8 billion by 2030, with SaaS being a leading driver. We are a B2B SaaS subscription model with annual recurring revenue. We have transactional pricing, and we do a land and expand strategy. We just achieved 1 million in ARR, and we anticipate achieving 2 million by the end of Q3. There's two certainties in life: death and taxes. I'm raising $2 million. Join me on my moonshot journey to Decacorn. My name's Amanda, and Notice Ninja, and you'll find me in orange. Thanks.
Thank you, Amanda. All right, next up is Paperstack.
Hi, my name is Asel, and I'm a co-founder and CEO at Paperstack. Think about the time when you purchase something online on Amazon, or maybe your favorite influencer celebrity launched their brand. You will be surprised that the brand that generates anywhere from $5 to $10 million in revenue will have less than $50K left in their bank account. And this is because e-commerce is a very capital-intensive business. Before they generate a single dollar and realize it as a revenue, they have to purchase raw materials, manufacture the product, ship the product, invest in advertising, set up fulfillment and shipping to fulfill the orders. And the situation gets even worse for brands that sell across multiple platforms like Shopify, Amazon, B2B, wholesale, and retail. The challenge is that now the brands need to fulfill multi-million-dollar purchase orders and will only get paid 60 to 90 days later. And that forces the CFOs constantly project their cash flow and match accounts receivables with accounts payables and constantly raise working capital. And this is where Paperstack comes in. We've developed a financial operating platform for consumer brands so their CFOs can access working capital and automate accounts payable in one place. Using our platform, CFOs can integrate all their point-of-sale data, banking information in one place, instantly get access to working capital for their inventory and marketing, schedule account payables, and save thousands of hours, but most importantly, have a peace of mind knowing that they can rely on Paperstack to meet their important accounts payable obligation. And so far, it's been working. In the last 2 years, we've onboarded over 1,500 brands on our platform. We've surpassed $1.5 million in ARR and on track to get to $5 million this year. But most importantly, we've recently secured a substantial off-balance sheet credit facility that will allow us to grow to $75 million once fully deployed. We're a team of finance executives repeat founders and e-commerce operators, and we're supported by amazing investors. Thank you so much.
Thank you. All right. Next up is Parlay.
All right. Hello, everyone. First off, thanks for being here. I'm Jay Long, the co-founder and chief operating officer of Parlay. Parlay is an embedded fintech that helps community banks, credit unions, and CDFIs better support underserved small business borrowers. And we do that by digitally transforming the experience of applying for a small business loan. Parlay was born out of a really critical problem. Within the US, there are 33 million underserved small businesses, and 4 in 5 small business owners applying for a loan get rejected. As you can imagine, that results in mass die-offs for small businesses and leaves billions of dollars intended to be allocated for small businesses undeployed each year. So we built Parlay to tackle that problem with a 3-pronged approach. First, we increased loan application packet quality and transformed the user experience of applying for a loan from something that takes on average 26 hours according to the SBA's own data to something that takes less than 2. Secondly, we transformed the insights available to small business owners through proprietary AI algorithms. And finally, we provided new efficiencies to the financial institutions supporting these groups by ensuring they had the right data at the right time. For small business owners, we took inspiration from TurboTax, transforming what is usually a very complex process into a very intuitive user workflow that uses plain English yes/no questions to make it far easier to complete packets. We've already seen from some of our customers more than 60% increases in throughput and completion, and a 13x increase in velocity of getting that packet completed. We then take the insights from that application and feed it into our AI engine, which in turn provides customized recommendations to those small business owners on the best next step they can take to increase eligibility. What that means is what is often a yes/no transaction becomes an opportunity for a yes, not yet relationship, where it can build confidence over time and make what can often feel like a very unclear and opaque experience far more understandable. Finally, for our customers, the financial institutions, because they receive much richer data from inception, they're able to be much more efficient in how they spend and allocate their time. We've seen decreases in the underwriting workflow by over 87% for these customers. And not only is it far easier for them to underwrite these loans, but that increased time savings decreases the cost of doing so, allowing them to expand to new market segments and bring on net new borrowers and depositors. Additionally, we don't just provide them with a completed packet, but we make it a texture-rich experience by leveraging data sharing partnerships from groups like Lumos and Vertical IQ to allow them to better understand the entirety of the opportunity in front of them. Instead of looking at loans in isolation, we help them understand the lifetime customer value of the clients, opportunities to cross-sell products, and ways to deepen that relationship so they become far stickier. Additionally, by helping them understand who's ready today, who's ready next month, and who's ready next year, they can be very proactive and predictive in relationship building, so they can balance a high-touch solution and a high-tech solution. Unlike our competitors on the market that rely on a point-in-time assessment for understanding eligibility, we're able to use our insights and data to give a much richer understanding of potential fit for a litany of products. So if a customer is ready today, fantastic, we can move them through. If a customer is going to be ready soon, we can nurture their eligibility, which decreases churn, and we've seen an increase in the eligible pipelines for our customers from 2.5 to 2.2x. And then if they need to be referred to a different product to better fit their needs and their eligibility, we can make all that referral happen at scale. Our technology exists as either a bolt-on to loan origination systems or as an independent standalone solution that provides underwriters with the insights they need to support small business borrowers. As you can imagine, that technology has allowed us to move very quickly after a very large market segment. Within 2022, there were over $400 billion in small business loans issued within the US. And our beachhead market, which is the SBA 7A suite of products, issued over $30 billion in loans in 2023. We're using our insights and algorithms to scale out into a series of conventional short-term loans and additional government-backed loans in the future. To date, Parlay has raised $1.7 million in venture funding. We have over 53 customers in the pipeline. We are continuing to grow and expand our scale nationally, serving a litany of underserved customers across the country and underserved communities. And if you're interested in working with small business lending and borrowing partners, we'd love to talk with you. Thanks so much for your time.
Thank you, Jay. All right, next up is Stratify.
Hi, I'm Liz Hale. I'm with Stratify. I work on product at Stratify. At Stratify, we are on a mission to accelerate financial inclusion while mitigating risk for financial institutions. We do that by helping financial institutions make better credit risk decisions like who to lend to or who to investigate for fraud. By better, I mean more fair, importantly, more profitable, and more efficient. We have over 20 customers across 3 product offerings. With our credit decisioning product, we are helping banks and lenders optimize existing, build new lending strategies to find better borrowers. In our work with one US-based lender, we were able to increase loan approvals by 140%, with actually a slight decrease in their expected default rate. This is the product that we're using in our work for the Underwriting for Racial Justice program, which is a group of lenders from across the country that are collaboratively working together to come up with solutions to expand credit access to borrowers that are traditionally out of that credit box. That leads me to our second product, Unbiased. Bias was always a key metric that we looked at in building decisioning strategies, and one that really our customers felt was very compelling. So much so that we broke that out as a separate product. Unbiased, as the name suggests, is a bias detection and mitigation product that allows lenders to, 1, proactively uncover fair lending risks, 2, understand exactly where those risks are coming from, and crucially, 3, undo those risks before they become a problem for their reputation and bottom line. Finally, in the fraud space, we have developed a fraud detection solution in partnership with FIS, which has shown a 51% improvement in credit card and debit transaction fraud monitoring. Across all 3 of these products, whether it be credit risk, compliance, and fraud, is our core technology backing those solutions. You can think of that core technology as a next-gen rules engine. Internally, we call it Probabilistic Rules Engine, or PRE, which allows for the benefits of the transparency of rules combined with performance close to or on par with black box ML methods. The benefit for our customers is the ability to combine SME knowledge with the efficiency and accuracy gains of a data-driven approach in a single unified decisioning engine. It was this sort of new approach to AI-based decision-making that our co-founders, Laura Kornhauser and Dmitry Lesnik, really envisioned when they founded Stratify back in 2017. We are now a team of 18 full-time employees and growing. We are not raising right now, but we are going to be going out to raise our Series A at the end of this year and the beginning of next year. So I would love to chat more. I love talking about Stratify. Please come find me afterwards and we can chat more. Thank you for your time.
Thank you, Liz. All right, next up is Streetbit.
Hi, I am Chloe Iannucci from Streetbit. So, as many great narratives, this story begins with humble origins. My co-founder, Damian, came from a less privileged background and turned to finance to escape poverty. After building software for stock investing, which led to a successful exit, people started seeking his investment advice. And so he surveyed the market, looking for available investment solutions, and was shocked to find that over 75% of retail investors lose money. This is why Streetbit was born. Of course, after more than 10 years spent in finance and algo trading, the first version of the app was heavily focused on data and was difficult to use for inexperienced investors. So we soon realized that the true value lay in creating a platform that executes trades for its users. This led to the integration of the AI into Streetbit. And our AI allows people to create a portfolio with a simple command. For instance, I can just ask, hey, Streetbit, create for me a portfolio that follows the US Congress members' trades. And it will generate a well-diversified portfolio in just under a minute. While initially being offered for free, experimenting with pricing revealed that 8% of our downloaders were willing to pay $20 per month for our service. So we experienced rapid growth, reaching $800,000 in revenues and maintaining a staggering 20% monthly growth rate. Recently, many financial companies reached out interested in what we call the Financial Semantic Search API. This technology could basically replace the search button in all the financial-related website and app in the world. Our first B2B milestone came in April with the signing of a contract with $100 billion asset manager. So our vision is that all the financial products will enhance their offerings by integrating an AI that is connected to real-time data and also to private alternative data sets, creating a product that truly understands what people need. Oh, and one last thing, we recently partnered with over 400 universities in the US, and our customer kids, grandkids, nieces, and nephews will receive a 25% discount on the college tuition at these universities. So if you like them enough, you can help pay for their education by investing with Streetbit. And we are the first app in the store to offer something like this. So would you want to be part of this incredible journey? Please come talk to me. I'm Chloe from Streetbit, and thank you.
Thank you, Chloe. All right, next up is Sunny Day Fund.
Hey, good afternoon, everyone. What if I told you that there will be $1 trillion in new deposits over the course of the rest of the decade? That's more than Schwab, Citizens, and Capital One in deposits combined. We've talked a lot about loans already today, but how do you make a loan? You need those deposits. That's what I'm going to be talking about today with Sunny Day Fund. We are the pioneering technology behind workplace emergency savings, a new workplace benefit category that has come into market as a result of Secure Act 2.0, which passed just a year ago. What's happening is that employers are now offering a way for their employees to save directly from their paycheck into a brand new savings account and helping those individuals learn that it's even more rewarding to save as a result of a subsidized interest rate that they're doing through us. So what does that mean? That means that a worker who may be making $18 an hour is now putting away $1,600 over the course of the year and keeping over $1,000 by not touching that money more than 1.6 times during the year. Let me translate that for the banks in the room. You now have a predictable flow of deposits coming your way. And that's why we want to partner with you. You want to work with us because we have partnered with not just employers, but record keepers to bring our technology to market so that employees, or 100 million of them who do not have enough emergency savings on hand, can leverage Sunny Day Fund to build up the financial well-being that we all want. We already have over 50 businesses on Sunny Day Fund, and we have the opportunity to grow quickly thanks to our new partnerships with record keepers. And for those that are not familiar with that term, it basically means folks like Fidelity and Voya, the ones that are powering your 401k, 403b type programs. As a result of those go-to-market partnerships, as well as with financial wellness companies, we're already reaching thousands of employees and are soon to be going into the millions. To power that growth, we're looking for capital. We already have $1.25 million committed as part of a $3 million round, and we're looking for that final lead check. So if you want to connect with me, I'm Sid at sunnydayfund.com. At the least, follow us on LinkedIn because we got some fresh content and we always bring the sunshine. At least we will later today. Okay, bye.
Thank you so much, Sid. All right, we're getting it close. Next up is Zeru.
Thank you. Hello, everyone. Dennis Kell, co-founder, CEO at Zeru, and Navy veteran. How many people in the room have ever borrowed money from a friend or family member or loaned them money? Show of hands. Pretty much everyone. All right, well, you're not alone. So according to the Federal Reserve Bank, Americans lend and borrow over $200 billion a year with each other. So that says friends and family are one of the largest banks in the world. It also says that Zeru is not a platform trying to convince people they should be lending and borrowing money with each other. Clearly, they're already doing that. So let's talk about the data. okay? According to the Federal Reserve Bank, Americans lend and borrow over $200 billion a year with each other, and we also know that 60% of Americans are living paycheck to paycheck, okay? So that's where Zeru comes in. With a mission to drive financial equity and inclusion, Zeru is the world's first relationship-based lending application to formalize and simplify loans between friends and family. We take the awkwardness out of that process by automating those monthly payments, and we also bake in some bill pay transparency by way of Zeru Pay as an embedded payment method for billers, which are our partners, okay? So how does it work? So if you're 30 days late on your AT&T bill today, you get a text message and an email from AT&T. Within that, there's a link for Zeru that says, need a little help. You click on it, you open the Zeru app, you verify your account number, the amount you owe, you select your friend or family member from the contacts in your phone through the app. I'll select Artie because I know her. So I say, Artie, I need $300. I'll pay you back over the next 3 months. Once Artie approves my loan, instead of the money coming to me, Zeru sends the money directly to AT&T minus our success fee. So that's how we make money. So we're an inclusive payment method, okay? We've already processed tens of millions of dollars in payments. We're on pace this year to process over 100 million in payments. We have amazing investors around the cap table, including Morgan Stanley, 630 Ventures, TrueStage, Northwestern Mutual. So we'd love to chat with you guys about whether it be as an investor or someone you know as a biller who could use Zeru Pay as a more inclusive payment option. Thank you. Dennis Castell, co-founder, CEO at Zeru.
Thank you, Dennis. All right, last but not least, Bridge.
No pressure. Good afternoon. My name is Rohit Mathur, and I am the CEO and co-founder of Bridge. I spent the last 10 years working at Citi in debt capital markets. My job was basically talking to medium-sized companies about their debt needs. So if a company in Minneapolis, typically in the winter, wanted to go buy their competitor for $100 million, I would go get them a term sheet. As I was walking out, my competitor from Wells Fargo or JP Morgan or Bank of America would walk in, do the same thing. Then this company in Minneapolis got to compare the 4 or 5 term sheets, select the best debt financing option for them, and move forward with that. Now, turn the page and think about a small manufacturer of forks and knives like the ones over here. Imagine that forks and knives manufacturer gets a big contract at Walmart to supply to Walmart, right? The first thing they think of is, this is amazing, this could change my business. The next thing they think about is, how am I going to pay for this? That small or medium-sized business owner doesn't have the same access as my client in Minneapolis. So because of that, we created Bridge. Bridge basically connects small and medium-sized business owners with over 75 lenders that we've got on our platform. Those lenders include community banks, private debt lenders, equipment finance lenders, purchase order finance lenders. What's unique about Bridge is that we have partnered on our go-to-market strategy on the borrower side with Walmart, Best Buy, Dollar General, Chipotle, and Hilton. So we help their suppliers, and in the case of Hilton, their franchisees or hotel owners, to get access to capital. So my go-to-market strategy is really embedded with those larger brands, and I find them the types of capital I need and the options that they can pick from on our platform through our lending partners. We've raised already and aren't raising right now, but are keen to talk to investors about our next raise, likely next year, or to users and to corporate partners and lending institutions. Thank you.
Thank you so much. All right, a big round of applause for all the founders.
Thank you for that. I'm Dan Roselli. I'm the other co-founder of RevTech Labs. Just a thank you to all of you for attending. We left plenty of time here at the end to go do networking outside. One request, this room with all the chairs is awful for networking. What always happens with events here is people stand here. Just mosey, founders, everyone mosey on out there. It's much nicer networking, not after negotiating around the chairs. One other big thank you I'd like to do is to the RevTech Labs team, particularly Ashley and Casey, who helped make all this happen. Please give them a big round of applause. To the other partners and accelerator partners that are here, to the Rise Center for hosting us, for Empire Startups and that whole team for helping make the event and the week so special. Give all those folks a big round of applause and a thank you, please. The last two logistics, there are cards there, as we said, for our version of New York FinTech Week and the Empire Startups event. Ours is called FinTech and InsurTech Generations in June in Charlotte. We would love to show you all some Southern hospitality, so please come on down. If you didn't get the QR code for the app, there's a little sheet at the reception desk that has the QR code again, so you can scan that, and that will have information and the ability to contact all the companies that you saw up here today. So let's end. One more huge round of applause for the presenting companies. Thank you. You did a great job. Thanks, everybody.